Hey there, my name's Curtis Lucas, and you're watching Empire Building. So it's about 9 minutes until the market closes, and I'm sure many of you are just as shocked as I am to see that despite Bitcoin breaking out yet again, forming a new all-time high, Marathon Digital failed to get out of bed this morning. In fact, well, it did get out of bed, but it fell flat on its face. And ordinarily, at least in the past, due to my investment style, I wouldn't have cared. But this time, I chose to make a sizable bet that Bitcoin was going to break out and that these mining stocks would finally respond accordingly. That was true for only one of them, Riot blockchain. I've been racking my head over why. I really can't explain it. The only thing that I can think of, well, really, it's probably a combination of things. One, Riot had recently published their mining results for the previous quarter, and, well, things were looking pretty good, except that, well, we'll take a look at that. Riot announced a production of 187 Bitcoin for March of 2021. Total Bitcoin production for the whole of the first quarter was 491 Bitcoin, and they had deployed a further 2,400 S19 Pro amp miners. But as it boils down to it, Riot, as we can see, so far on its balance sheet has a total of 1,565 Bitcoin on its balance sheet. Hut 8 has about twice that amount, and Marathon, in fact, has over 5,000 Bitcoin on its balance sheet. As it stands right now, the overall market cap for both of these companies is almost identical. But the frustrating part about this phenomenon is not that Riot went up. By all means, it should have gone up. But it doesn't make any sense that the rest of the mining stocks had to go down. This I'm struggling with. And like I said, in the past I wouldn't have cared. But the problem is making these short-term risky options bets does tend to lead to weird phenomenon like this. You can be right, as I was, predicting that Bitcoin would break out, which it did, but it didn't matter. I was still very wrong. And this is something that I couldn't have predicted. There's no reason to anticipate it, but yet it happened all the same. I've always said that I would be upfront and honest with both my successes and my failures, and I thought it important to highlight this failure in particular because this is a harsh reality.
You know what's worse than a loser? Someone who won't admit he played it wrong.
The fact of the matter is, if the price of Bitcoin sort of decides that it's gone far enough, it needs to consolidate, maybe pull back a little bit more before extending further, and this carries on into Friday, I'm toast. I'm going to lose $160,000. In a market that just made fresh all-time highs after 2 months of struggling with that barrier. All this while invested in what should be the purest and largest Bitcoin play. Marathon Digital has, as you can see, 4,000 more Bitcoin on its balance sheet than Riot does. And while some of the machines that had recently arrived, they had announced that there were slight delays in getting some of those installed. By now, perhaps they are complete, but even if they're not, we're a matter of weeks away for that being completely installed, and Marathon will be officially larger in installed hash rate than Riot is. Marathon did release its brand new website, which does look a whole lot better than it used to. So I'm very happy to see that that was released. There's a bit more information on here than there used to be. Looks fantastic. Very happy to see this. Now, but when we're getting down into the business here, we can have a look at what I'm interested in, their facilities. And they've included some photos of their new facilities inside the mining containers that they have located at the Hardin site. We can even zoom in here and get a nice close look. There we go. As you can see, a lot of miners. They tend to pack these things quite tightly. And nice close up, you can see the 19 Pro, 110 pentahash per unit. These containers are beasts. And on that note, they kind of look like beasts. This is one thing where obviously the presentation is a little bit different. They're not pretty, not at all. In fact, they're kind of ugly, like the ugly duckling here of the group. That is one valid criticism that I say anybody could levy against the company if they want to.
What a piece of junk.
She may not look like much, but she's got it where it counts, kid.
But it does got it where it counts. The fact of the matter is, if these containers looked prettier, they wouldn't make any more money. They might take longer to set up and could further hinder the progress of Marathon actually getting all of these containers fully deployed, which in the end, it's all that matters. Let's face it. They don't need to live in a pretty house. I'll accept that. I do recognize that there's a perception that goes along with that. And for a $5 billion company, it might choose some to take a second look. Maybe this isn't something that they were expecting. Not everybody might have seen the video that I had released about this previously. But all the same, this is what they look like. This is them in operation currently. They're doing the job they were put there to do, and that is to mine Bitcoin. So yeah, they may not look like much, but they do have it where it counts. As I'm recording here, the market has officially closed, so we can have a look and see what Bitcoin did. Well, we've got a nice continuation of the trend. This looks very good. I did not sell. With the IPO of Coinbase coming tomorrow, I thought, I'm gone this far. I'll have to let it play itself out. It's incredibly risky, and at this point, there's no strategy. This is hope. And as we know, hope is not a strategy, but it's really all I've got left at this point. Obviously, this isn't my entire portfolio. It still represents approximately 6% of my entire investment portfolio. Not a non-trivial amount. We're still talking about $160,000 that I have riding on this. And as a comparison, the fact that we know that Riot and Mar were approximately the same price when I executed these contracts, had I been executed in Riot instead of Mara, I will show you how much those contracts would be worth right now. We can look at the option chain for Riot and scrolling down here to the $60 call options, which is the ones that I picked, closed the day at $2.95. I currently possess 1,412 contracts with a cost average of $1.11, currently trading at 88 cents. Same contract. Pulling up a calculator here. This could be fun. This will actually teach some that want to understand how these contracts are priced out. This is just a little fun exercise. $1,412 contracts times $2.95. That's the price, closing price, the ask at least, for the $60 strike price expiring this Friday. This is for Riot. So we multiply the 1412 by $2.95. Now we have to take this number and multiply that by 100 shares. There are 100 shares in every contract. And so that'll actually determine what the entire proceeds of that trade will actually be. So multiply that by 100. $416,540. Instead, sitting at $124,256 currently if I had sold at 88 cents, which was the closing price of my contracts. So the difference there being 124, 256, $292,284. And that's an extraordinary swing. But this fight isn't over yet. And we still don't know what Bitcoin is going to do next. But obviously, like I said, the only strategy I've got left is to hope. And this is not something I recommend. Obviously, I placed this bet with the strategy being Bitcoin will break out. I was right, but I'm still obviously very, very wrong. And in this situation, there's no good option. I mean, it's Sophie's choice. You can choose to either sell at a guaranteed loss or hold on for the chance that maybe things turn around, or you lose it all. So it's the alternative is you take the loss and then simply buy further out, buy yourself more time. But you do pay for that. So while it does give you a higher probability of overall success, in the short term, if things do turn around, well, obviously you can be kind of disappointed that you made that move, but it does lower your risk. I'm willing to give this one more try simply because tomorrow's announcement, tomorrow's release of the highly anticipated Coinbase IPO, which, by the way, mostly because I'm obviously predisposed at the moment with my investments, I'm not going to be investing in the Coinbase IPO. But I probably wouldn't have done that anyways. I figure I'm already fully exposed to this space through the mining stocks. And in my opinion, I think the mining stocks have the potential for a far greater multiplier than, say, a company like Coinbase. I do think that Coinbase will be an excellent long-term investment for those that want to have direct exposure to this emerging asset class in terms of companies that are directly exposed, that are literally building out the infrastructure. Coinbase is a huge part of the American infrastructure and what I believe will become more worldwide. Between their stable coin for USDC and many of the other products in terms of custody and other things that they're getting involved in, they're going to be at the forefront of everything that comes next in this technology. So owning them is a very stable way of gaining that exposure, but I don't think it's going to have the same potential multiplier. And even with these stocks, despite this strange behavior that we're seeing, this can only be kept up for so long. I don't know if it's manipulation that's happening here, or just a simple misunderstanding, or maybe people just really don't like those containers. If that's it, then this is a screaming buy right now, because none of that has anything to do with the actual thing that matters, and that's going to be how much Bitcoin can you get. The faster they get these containers installed and fully operational, the more money, the more Bitcoin they will be putting on their balance sheet. And the fact remains, Marathon has the highest standing order of S19s from Bitmain. And based on their actual latest report, where they got into exactly what their delivery schedule is going to be, it's actually quite remarkable because it even exceeds what I had previously anticipated. Inside their latest update, they have their delivery schedule. And I'll show you what I had in mind. But in here, you can see in August there was 7,000 miners. And it actually starts to increase from there. By December, and November even, they're getting 14,700 miners, 10,000 in October, 24,000 in December. Based off what I had previously forecasted, I don't actually have that my own table on this computer that I'm working on right now, but I'll actually put this up next to the screen here so you can see the comparison for yourself between what I had previously forecasted for deliveries and what we actually see reported here. And none of this is to say, again, that Riot doesn't deserve the gains it had today. It truly does. But in my opinion, they all do. I'm not one of those that's on Team Riot or Team Mara. I mean, obviously my portfolio is on Team Mara, and I've made no secret of that. But I've simply done that because I'm basing it on the fundamental evaluation of these companies right now. I like Riot, and I like it even more since the previous announcement that they made. But that still doesn't change the fact that relative to Mara, I think that Mara is undervalued more so than Riot. I think they're both undervalued, to be clear. But Mara has a lot more in its fundamental evaluation effective today that's just not being fully recognized. And as frustrating as that is, imagine how frustrating it is for all those who are holding the Canadian mining stocks that don't have exposure to the NASDAQ. They suffer insanely low evaluations, all of them. And everyone can make the case of which one they think is the most undervalued, but really they all suffer from this problem. And we know that at some point, all of them are going to get listed on the NASDAQ. We don't know if it'll happen all at once or if it's going to happen one at a time, but it will happen. I don't know when that's going to be, but I'm patient enough to wait that out. I certainly don't have any options at play that are impacted by that, which is actually a good thing. But since those stocks are only available on the Canadian Stock Exchange, the Toronto Stock Exchange, and the OTC market, there are no options available for them. So it's a good thing. The fact of the matter is I can hold those as long as it takes. I don't have to time it. I just need to be there when it happens. But I've definitely learned a very hard lesson, and not one I will soon forget. But that's it for this one. Now let's get back to empire building.